Good afternoon, everyone. You're all very welcome to today's US market open. Looking at the price action into today's US open at 2:30, 10 minutes beforehand. I'm really kind of following on from last night's weekly webinar, looking at all of the primary asset classes, and of course looking at the futures market as well. Now, I suppose first and foremost, we alluded to it yesterday. Today was going to be a quieter day on the calendar side of things. We were kind of obviously gearing towards Thursday and Friday. Thursday, obviously, with the US prints at 1:30, and more prevalently at Friday for month end, going to be an important couple of days for these markets. And of course, looking at it more broadly beyond that and into the futures side of things. So of course, naturally, as we look into the US market open today on the one-day performance, quite a lot of assets are around that kind of net negative to net negative 0.1 to kind of positive 0.1. A lot of them are around that kind of break even benchmark into today's open. You're seeing that quite across the board. The likes of the S&Ps, the Dow Jones, just slightly below break even. The Euro stocks obviously slightly higher, but marginally a lot of the assets are around that break even, give or take a half a decimal percentage place. So on the inverse of that, really kind of following it on from last night, we talked about how the DXY was going to be really consolidating, looking for kind of a clarified break of this highlighted yellow region. As I said last night, when we talked about it in our Zoom, we had obviously that grind up Friday. We've got that almost linear correction back to where we were last week. So basically what that's meant is in the overnight markets, in the price action between Monday and Tuesday into today's US Open, we've basically seen the dollar eradicate all of that initial selling pressure that came about off of the Powell comments last Friday. So naturally, we're seeing euro dollar at those benchmark lows at the bottom of this region, just underneath 116s. We're obviously seeing the cable price move lower back into this threshold, of which we even discussed last night. I said that was going to be an area of interest that I would be following to see if there was any sort of respite in the dollar and any sort of strength in the cable. This is the area that I'd be looking at, which is around that 130 to 134.30 handle. And as you can see this morning, we've come right into that zone, particularly on the lower time frames. Now, when we look at the price action structure on cable specifically, naturally, we've, as I said, that impulsive move on Friday, all but done. Price action coming back to this value area, and you can see that as well with that V-shaped bottom. Now, on the session, when we look at price action from yesterday into today, yes, we have moved lower. Yes, we have created a new bottom. And yes, we are below value area. So at this moment in time, we've mitigated that impulsive or aggressive news related movement on Friday with that apex up and then back down. But really now looking to see, does these areas here actually solidify lows on the session? And of course, we'll be watching that value area into today being very, very close. Now, I did take a small bite this morning around mid-morning time off of those lows, but really looking to see if we get that little bit of a bite back and progression higher, which will again reiterate off the fact that this DXY might hold this regional short-term high. So from that perspective, it's really a case of, well, this DXY, as we know, it has been very consolidated. The invalidator for me is basically the DXY breaking above the yellow area and progressing higher. And if that happens, well, then you'd actually expect this value area to reject, at which point then markets would ideally retest this area of contention that we see visited last Friday, and that initial buying impetus move on cable then becomes invalidated until such a time where that DXY actually proves to have failed at said region. So there's a little bit of a cause and effect. There's clear structure, there's clear logic. There's a definitive approach, which I think is extremely important, but there's also key invalidators. So when, let's say, a bias goes against you, it's important to be able to cut that out pretty quickly, but know exactly when and why and where you're doing so. And that for me is incrementally very, very important when it comes to managing trading positions. Now, in the back end of that, we have seen the DXY yesterday trade again in this mid-yellow region between kind of 14, a little under 14 and a half into those 15 benchmark levels. And this, of course, was the broader region of where we traded most at the early part of the year. And of course, more recently in the summer doldrums, when we've seen that aggressive orientation in risk to the upside, we've really seen that VIX become entrenched into this 14 and a half, lows into that 15 range. So for me, as long as the VIX remains in this region, there's not really a massive desire to open up or look at potentially shorting these equity markets as yet. Although we have obviously seen the S&P give way a little bit this morning at that key pivotal level, we're really looking for the VIX into the open today to start to ascertain more volume. Now, when you look at it as well, you'll see the quoted price on the VIX last night was around about 14.65 to 14.7 on the close. This is the pre-market price where we're trading at around about the 15. So if we start to see this move aggressively higher, that can then start to instigate more selling, which again will reiterate what we've talked about in these markets at this 6450 6500 handle, which has been so pivotal for the likes of the S&P. So albeit this morning, yes, we have seen a little bit of a reaction in pre-markets. We sold off initially into London, we got a little bit of a bite back into value area, and you can actually see around about 1 o'clock or so we've seen that volume kind of pivot a little more to the downside. So it's really a case of, well, if that VIX is to break above this 15.25 handle, that will then be the additional nuances needed to really see these S&Ps run lower. And of course then we're starting to look at a more material sell-off, whereby we've had phased selling price action through the majority of last week, that aggressive impulse on Friday off the back of the Powell movement, a little bit of profit taking and fading into the early to mid parts of this week, followed by retest, rejection and phasing lower, of which case then that area really from last Friday 63.50 into 63.80 becomes a very, very opportunistic level to look out for, but becomes reinforced if that VIX is to move higher through the gears. So basically rule number one here is we're ascertaining bias for the session, obviously into tomorrow, Thursday, with the US data prints, and of course Friday month end, and of course we've got Nvidia earnings reports tomorrow as well. Secondly, we're obviously looking at the volatility side of things, because volatility is going to gauge volume. When the volatility side of things picks up, we know we obviously need to pivot our viewpoint into a constructed manner where we're actually trading with the markets and trading with what we see, not with what we think. And I think that's also very, very important here as we look at those early selling pressures into the open on the likes of the S&Ps, but incrementally also on the NASDAQ as well. And there's no surprise as well. Yes, this was the move on Friday that kind of phased, or sorry, not Friday, last week, when we had that aggressive sell-off in the NASDAQ. But when you look at price action from Friday, we drew it out last night. That area around 23.2250 is going to become very, very interesting, particularly as we hold that 23.550 600 as a short-term top. Now, that was Friday's highs. You can see we've tried to get above it again today. It's almost an identical type of formation to what happened with the S&Ps. We look at it on the session, faded off, a little bit of recovery on the open into Wall Street, but by about 1:30 we start to see these markets move lower. And as you can see now, there's additional pressures already being visible in the last hour, where we've gone from the 23 mid 500s to sub 23 500, of which we're currently looking at now. So it's really a case of seeing, does that selling pressure become more materialized, but also looking to see, do we get additional variances in the likes of the dollar, strength v weakness, but also more prevalently, as I said a moment ago, in the VIX as well. So those are the two plays that I'm looking at, really into the open, just looking to see what happens. But also as well with the VIX, you have to see that there is going to be an unfilled gap. So in a moment or two, when the markets open up and we get the proper pricing on the volatility index for the S&P via the CBOE, we're going to obviously see a gap. So this is obviously going to be important as well, because this area here from last night's close to today's open is going to give a gap. And of course we obviously see as well on the VIX quite a lot, when we get a little bit of an open higher or an open lower on the VIX, how often do we tend to see it being filled? Well, if you were to look at last Friday, VIX gaps higher, fills it, and of course on Tuesday the VIX gaps higher and subsequently filled it yesterday. So we'll just be careful of that as well, that if we do gap higher, it's not necessarily going to be sustained momentum, because we have to obviously see whether that gap fill presents itself between 2:30 and 3 o'clock as well. So the last thing you want to be doing is incrementally selling S&Ps at the lows, expecting it to move lower, expecting it to probably revisit the likes of yesterday's value area, which is around about 30 to 40 points lower, and then incrementally the VIX actually closes the gap. Okay, because then what would happen there is the S&Ps would actually go the inverse, and you'd probably see another move back up into that value area. So that's why the first 10-15 minutes for me is critical, just to see how these markets open up. Let's see what happens when we play off of that. S&Ps on the day, value area around 64.75s. NASDAQ value area around about the 23,550s, give or take. So from my perspective is I'll be looking to see if there is a short-term reaction off of value area A on the NASDAQ and value area A on the S&Ps as well. And of course, really ascertaining then as we move into 3 o'clock on the session, moving up to the higher time frames, do we actually see a little bit of a correction or any sort of reaction off the back of that on the VIX as well. So let's just see what happens there into, as I said, 2:30 and beyond as markets open. Now, other than that, the Dow yesterday, as we saw, got a nice little rally into the close last night. Has kind of petered off a little bit into that 45.4, 45.5 handle. It has made new marginal lows on the session. If you go to the 30-minute prints, you'll see that yourselves. Just gauging kind of short-term price action structure. We are getting a little bit of a bite back to the value area. So as I said, this is going to be quite important, as I said, into 3 o'clock to see whether we get an encapsulating close and effective push higher, or maybe a wick rejection, and then obviously price action falters again. So that's why, as I said, that first 30 minutes for me is important, regardless whether you trade S&P, NAS, or Dow. In Germany, we've obviously seen the DAX continue to run lower. We talked about it yesterday. We had a gap down on Sunday into Monday. That was filled pretty much. We had that faded move into pre-markets this morning with aggressive runs lower. And of course, when you look at the calendar today, there's no surprise as well. The German data this morning wasn't particularly pleasing at 7 o'clock. As we saw that consumer confidence survey, the GfK, come in worse than expected at negative 23.6. So the German DAX, we've kind of talked about that cyclical rotation out of European equities anyway. So that kind of movement this morning has really been kind of reinforced by the data, but the narrative was pretty clear all along, expecting it to see probably revisit that 24s, something we've been kind of looking at for the last week or so, and it certainly is ringing out the case as well, as we see the markets just kind of hover above that level. In terms of the FTSE, this was the play we kind of looked at last night, looking for kind of a short-term dead cat bounce rally, and then looking to see would we actually get that initial movement. These were the arrows that we drew in last night's Zoom. So far, it actually is kind of playing out a little bit. Maybe would have liked to see a little bit more of a deeper upside correction. But overall, the theory, the logic behind the FTSE move so far is working out. It'll be interesting to see whether we get another faded move back into that kind of sub 9200 level into around 9150. So that'll be an interesting one to look at as well. And then, of course, when we look at the crypto side of things, just very, very quickly, these moves on BTC that we've kind of looked at played out perfectly. Now, again, this is where things get a little bit more interesting, because of course we've had that kind of consolidation yesterday, V-shaped bottom we talked about last night. We've got a little bit of a run up this morning. We've got a little bit of a correction back down into that 110.7 handle, and you can even see as well on the wick, if we tidy it up a little bit, markets has created a V-shaped bottom. So if we're getting back above value area again, the likelihood is I wouldn't really be that surprised to see Bitcoin try and get another leg up. But as I said, the first 30 minutes is going to be pivotal. If you trade cryptos broadly around that value area, to see if there is an impulse or ultimate rejection for markets to retest these lows. So that's really the breaker bounce there. Ethereum, on the other hand, very, very similar scenario. So you kind of see that I've set kind of short-term alerts. So this was the move on Friday. The impulse, the stop hunt, the liquidity move, back down again. Price action structure, incrementally just taking the mitigation on the 4 hour for the fair value. You can see that beautifully. Got a short-term breakout and retest above 44.45. But even more broadly beyond that, that grind higher and back into that 46.50 handle. So that for me is the breaker bounce. When you look at the lower time frames, as we kind of talked about there in Ethereum, that aggressive grind, but markets has been very choppy today. So that for me is no trade until there's definitive action. I did say that probably the bigger moves this week will come off Thursday's data print. Given, of course, we had a decent reaction last Friday off of the news, and there was decent reactions the week prior, again off of news as well. So let's just see how that one plays out in the back end. And then, of course, as we move into the FX markets, we talked about it a little while ago, euro dollar at those session lows. Interesting to see what happens here, but that's incrementally going to be brought about by what happens on the DXY. Do we get a move higher? Do we get a move lower? And that is going to be important. I think if we can start to fade this dollar rally, well, then you might get a little bit of a short-term bounce in euro dollar. But at this moment in time, I would definitely favor a cable price of long than euro dollar price of long, just purely because of the symmetry of the price action structure. So for me, as I said, if we start to break out through this yellow area, this value area here from the 5th and 6th of August incrementally becomes under a lot of short-term pressure, which really sees price action potentially breaking 1550. And if we break 1550, you'd actually expect this euro dollar to probably unwind again, at which point then that DXY has that potential narrative to break through 99. So basically, in short, not a whole pile on the data front today. All data is really going to be either Thursday and Friday for obvious reasons, as we've discussed prior. Short-term trading is, as I said, is going to be really reacting off of the value area on the session. So that's what I'm going to be watching, as I said, in the S&Ps and on the NAS. On the VIX, as I said, just to kind of conclude that, we've obviously seen that gap 15. Now we're back off the 15 down into 14.9. So the logical scenario is that if we were to see a gap close on the VIX, so this is obviously the gap here. So this is where we closed last night. This is where we opened today. If we start to see that fade off, look for potential gap close into that 14.6, 14.7 handle, which would probably short term get us back to the value area. It's just a case of, do we potentially fill the gap and then incrementally try and rally through the course of the session. And that is obviously something that I'll be looking out for too as we progress into 2:45 and of course into 3 p.m. In terms of then the futures markets, as we've opened up a little bit more, again, a lot of assets around this kind of break even, slightly higher to slightly bullish. And in fact, there's only what, 1, 2, 3, 4, 5, and maybe you could just about call it wheat. There's only 6 assets in this list that is actually positive or negative over 1%. So there's 3 on the cusp of 4 being down more than 1%, and there's 2 being up of 1%. All the rest is plus or minus 1%, which basically shows that we're in a fairly tight consolidated range on the session. All right, so that's kind of where I'm going to leave it, folks, for the minute. Other than that, not really too much else to say. Probably the last one I kind of talked about there was gold. Gold did get back up to that 33.95 handle late yesterday. We're still kind of trading below that, so there's no real any kind of clear clarity break yet, as to be expected, because a lot of these markets are holding pattern. But again, if the DXY can manage to get a break or rejection off of that, no doubt that you'll see that flow back into gold prices as well, depending on which way the direction of bias tilts. So that's where we're going to leave it for today, folks. I suppose the last question really is, we kind of talked about it last night, but just a quick update. The Fed decision probabilities for the 17th of December rate meeting, 78%, obviously expecting a 25 basis point cut. My real opinion is probably up around 90, and that is obviously something that we've been kind of talking about probably for the last 2-3 months now. It's been a very, very clear directional bias. I think the only surprise really would be if the 50 basis point discussion actually started to gain a little bit more traction over the next 2 or 3 weeks. I think a no change result is effectively off the table at the moment. It's really a case of, do they go 25 or super dovish at 50? And you can see this on the poly market as well, which tracks retail sentiment as well, and is quite useful just to kind of ground bias. Now you can of course use different exchanges. They have weighted probabilities as well. This is just a handy one for the retail market that we use as well, just to gauge, because retail sentiment is obviously quite important at this moment in time. So as I said, that's really going to be it for today, folks. We're going to be back tomorrow for US Open, and it's going to be interesting because of course it's going to come in the backdrop of these 3-4 key data prints, really pivotal ones for the GDP and of course the core PCE, and really looking to see if there's that kind of break or bounce off of these equity markets, which we are pretty much in a holding pattern today for Wednesday the 27th of August. All right, so guys, have a great day. Trade safe as always. Let's keep an eye on, as I said, the volatility side of things this afternoon, and of course these value areas, they're going to be something worth watching as we move into 3 p.m. if you're looking at potentially taking on exposure or risk into the afternoon. All right, have a good one. Trade safe, everyone. Thank you very much.